Welcome to A Day in the Life. I'm your host, Darren Bloomfield. Joining me is Brett Dresner. Brett, welcome.
Yeah, Darren, thanks for having me. No, it should be fun. I appreciate you having me on.
Yeah, so a little bit of backstory here. I interned for Brett. It was my first internship at AmWINS in 2020. In the summer, it was a summer internship. We were able to go into the fall. So that was great. Just kind of lined up with my timeline here at school and just with the growth of your team there. So can you kind of talk about your day-to-day now and just kind of how you got to where you are now, just kind of from your time in the insurance industry so far?
Yeah. I mean, so if we go back, obviously I sit in Chicago now, but I graduated University of Pittsburgh back in 2014, and right out of school, I had a couple of job opportunities. One working for RT Specialty in Chicago, and then the other working for a smaller wholesaler called Partner Specialty Group out of Stamford, Connecticut. And just looking at those opportunities, I felt like Stamford and being in that smaller company was going to give me the opportunity to open my eyes to everything that the insurance industry had to offer, every line of business. And being that generalist wholesaler, we were constantly working on everything from product recall policies all the way to commercial property policies and everything in between. And after a couple of years there, I was given an opportunity. I was living at home. I'm given an opportunity to go down to Florida, start up our commercial lines team down outside of West Palm Beach. We had a personal lines operation there, and sitting at home watching MASH reruns with my dad, and it felt like it was time to move on to the next phase of my career. I spent a year down in Florida, and I'm kind of doing the long distance thing with my girlfriend at the time, and she says to me, "Look, if we're going to make this work, we need to be in the same place, and I'm not moving to Florida." So just like that, I grabbed my stuff, moved up to Chicago. They were very, very nice, set me up in a satellite office. And then 3 months later, we got bought by AmWINS. So overnight, we went from being the 10th largest wholesaler to the largest wholesaler. I moved right here into the AmWINS Chicago office. Worked under a senior producer for about a year and a half or so, and then spun out and have started to build my own team. So day to day, it's always different. I think now is kind of a nice time because I normally spend so much of it on the road, in airports and hotels, and December is usually the time that I take a step back a little bit. Our clients don't really want to see us. Everyone's focused on finishing out their year end. So this is just a good opportunity for me to be in the office, be with my team, and focus on getting the year done. And then January 1st, we always look at is the most humbling day of the year. We all start back at zero and got to start building again. So it's kind of like that Atlas mentality. Got to just keep pushing the boulder up the mountain.
Yeah, no, it's definitely a really interesting story. Just kind of how like the insurance industry is kind of able to like move people, and then just like there's just so much like opportunity. And then something you kind of mentioned of like that generalist background, and we've kind of talked through the years, just kind of like the importance of kind of specializing, but then having kind of that generalist lens of like that foundation to kind of figure out what line of business you want to specialize in, and just kind of what subcategory, what niche, what even within that line of business. And then just kind of overall like how the insurance industry works, from like the retailers to the wholesale brokers to the carriers to the reinsurers, and just kind of having that kind of knowledge. Like how did you kind of decide on what to kind of specialize in?
I guess for me, I was always, and not to minimize my commercial property brokers, not to minimize what they do, but I always looked at commercial property. And when I was down in Florida, everything you see is property, is property focused because of the catastrophe exposures down there. Everything is just so focused on the wind and hail. And for me, I just got bored of property. And it just always felt like, to me, it's a very simplistic, and I know I'm oversimplifying, but it's like the building burns down or it doesn't. That's kind of the exposures. And yeah, so you've got your broad form, your special form, and your named perils. And yeah, you have the intricacies to it, but to me, it always, it just wasn't all that interesting to me, carrying forward. And I think from a professional liability standpoint, I always was interested by it, but I was focused always on these kind of smaller premium deals, and it felt like it was difficult to really get my hands on some, worthwhile accounts on the professional liability side. And for me on the casualty, that was always something where you have to stay in tune with the laws and, the current state of affairs outside of insurance. And that's something that I've always enjoyed doing. Going back to my college days, I was a journalism major. So, an English writing major, I was focusing on reading and writing. And I found that piece translated very well to the casualty marketplace. And just having to stay up to date and be well-rounded and well-versed in the world outside of insurance kind of brought me back to being that casualty-specific broker.
Yeah, no, that makes a lot of sense. Just kind of reflecting on, my time as your intern, just kind of with that casualty line of just following the legal system. And I just remember like going through loss runs with you and just remembering like, did this really happen? Like what, like there was a shooting at this hotel, or like they got bit by a dog, and it just kind of seemed like there was like such variety. And then like with that, like you really have to research and like really like look into that. Like you never really know what you're going to have to place, or like what happened and how to like explain that loss to an underwriter.
Yeah, and I think we now you guys have heard it. It's nuclear verdicts and reptile theory. It's all these concepts that are out there, that concern the litigious environment that we live in, but they're all very casualty focused. When things go wrong and the courts make have a verdict one way or the other, it's the casualty line of business that I feel is going to get hit first. Property is ultimately, and on the E&O side, it's what was your financial loss from a professional liability standpoint. There's going to be your payout. On the property side, it's what was your first party loss? What did you lose by this hurricane? But casualty is very ambiguous. And, the way that juries assign indemnities is very, very specific to the jurisdiction that they operate in. So, and it's something that you can control. For me as a broker, I can always stay, ear to the ground on what's going on in the jurisdictions. And I was just doing some research recently on vertical exhaustion of limits versus horizontal exhaustion of limits when we talk about additional insured verbiage. And a lot of that is driven by case law. So it's to me, it's very, very interesting. It allows me, to always have something to focus on because you have to keep learning in this industry. And on the casualty side, more than anything, I think that's especially important.
Yeah, and then just what you mentioned of like the litigious environment, just kind of you can kind of see that in like the different carriers' appetite of like why certain carriers won't write in certain states, or why those rates might be higher or it might be harder. Because like if it's harder to write in that state, then it's more likely going to go to the wholesale E&S market. So you'd be seeing more of those accounts.
Yeah, absolutely. I mean, you look at Cook County where I sit, that is a jurisdictional hellhole, as they call them. Southeast Florida, very similar. Parts of the West Coast, New York City, and a lot of that business as a result goes to the excess and surplus lines marketplace.
Mm-hmm. So just kind of with what you mentioned of that dedication that you need to be like committed to keeping up to date with like the legal system, keeping up to date with like carrier appetites, keeping up to date and really becoming like a specialist or like an expert in that. How do you communicate that value add and that market knowledge to retailers and prospective retailers when you're talking to them?
Yeah, I mean, I think it all starts kind of early on. When I was first meeting these retailers, you don't know. I mean, you kind of have to pitch to what you know. And as my career has evolved, I really advertise myself as this wealth of knowledge and as this database, both for the internal products that AmWINS might have, and then externally, if a client of mine wants to call and talk about what's happening in this specific industry right now, I've always told them that I stay up to date. And so I think that's all part of the messaging that we're delivering on a regular basis, is that we are this resource for you, both internally and externally. And if we can give you some insight to go help you win a deal, even if it's not with AmWINS, that's what we're going to do for you. So I would say that that's a big part of it is just acting as that resource, wanting to be that, that encyclopedia for our clients.
Yeah. And that's something that really stood out to me of like during the internship. I would just kind of like see you like sometimes turn down accounts or like say, oh, I'm not an expert in this, like work with this person or someone internally. And then sometimes there would even be like a program externally that you would just know it's an exclusive program and like AmWINS didn't have access to it. And then like, but like in the long run, that really makes a lot of sense because you might put all the effort in, place it for like 1 year, but even if it's not like a true ENS account, or if it should be standard market to begin with, like that's really not your account. So you're not going to get that retention. And then in the long run, like that's not really in your client's best interest or in the insured's best interest. So how did you kind of learn that? Or like, how would you kind of advise other wholesale brokers to kind of have like a similar mentality of that?
Yeah, I mean, I think that starts with recognizing that this industry it's a really small industry. So for as many people as are employed in it, and that's talking from the retail agency side all the way to the carrier and underwriting side. If you go out there and do what's best for the insured and do what's best for your client, it will come back. It will pay off tenfold in the long run. And I think it comes down to just having that long-term outlook and recognizing that even though you didn't get this account, because you did a good job on it, you're going to see future accounts. And it's a lot easier for me to say now, with the 7 years of experience I have and starting to see this full kind of cyclical environment come back to benefit me. And early on, it's tough because you're hungry, and I remember I'm being hungry, wanting every single piece of business that I can get, whether I know what's happening or not. And I think at some point when you work for a company the size of AmWINS, you recognize that there are people smarter than you. There are people who are better at various lines of business than me. So instead of me trying to finagle my way through something, let me put you in touch with someone who's going to do it the right way, someone who's a good representation of me. And then I know that in the future, things will come back to me. Ultimately, if my clients send me every single piece of ENS business, at some point, something's going to fall into my specialization. And for everything else, as long as they're getting the job done, they're having success, I always get to be known as the person who connected them and helped them get the deal done. And I always think that it's important to rub people the right way at all times, because at some point, you might be working for that person. They might be they might be a manager of a retail agency all of a sudden. So I always look at it like, do what's best for the client, do what's best for the insured, and it will pay you back. But you have to have that long-term outlook on things.
Yeah. So kind of with that long-term outlook, when you're first starting, like you mentioned, you're very hungry. You just want to kind of get in the routine of getting accounts in, getting them placed, and just kind of going through that process and getting experience. But then as time goes on, your team grows, your book grows. Can you kind of talk about like evaluating like your book and like what accounts you have in it? Maybe these accounts are better served somewhere else, or just kind of becoming like more focused. So then you can develop like those underwriting relationships better, and then also kind of be more focused on like your pitch to prospective retailers.
Yeah. I mean, I think book evaluating it's a constant trial and error. And my parents always like to remind me that when I started in the industry, I said I was going to be the small business broker. I would take every account under 5,000 in premium and I would hustle them and get them all done. And now, as we've since been acquired by AmWINS and we have a whole small business division, it's amazing how much free time I have been able to create by passing off those accounts, letting our small business, let the specialists, the people who do it best, let them handle it. And I think when you're evaluating your book, you're evaluating it on both sides. So the obvious side is my retail clients. And, I've got retail clients, and we basically every year I sit down and I say, who are my A's, who are my B's, who are my C's? My B's, those are the people that have potential. They're the people who treat me, I guess I should start with the A's. The A's are the people who treat me respectfully. They're kind of an open book to me, and we have a great working relationship. We see consistent growth year over year. The B's are the people that, they treat me well and they have potential, but maybe we're not hitting on enough because I have to dislodge another wholesale relationship. And the C's are the people that, probably their hit ratios are about that 15%. I'm not always loving everyone I work with in that office, but I like a few of the people. And every year we evaluate, are your A's still the A's? And the A's are the people that you're going to see 4 times a year, and I'm getting on planes. Those are my top priorities as I create my plan for next year. Those are the people I'm seeing first. My B's are the ones that I got to get them up into that A category and just make sure that I am not doing anything. My team is not doing anything that causes them to drop into the C category. And then the C's are the ones that very quickly, those for me, they have the shortest leash. We need to get them to that B range right away within the next year, or we need to drop them off and move on, to the next group of clients. And I think that the C's, a lot of it is, is there ethical behavior? Is there unethical behavior happening? Is there things that are being hidden from me as the broker? We're all on the same team. We're all pushing the boat in the same direction. And if I find a kind of that C range, or really any retailer who's not being honest with me, that's going to be a detriment to our relationship. And that's going to preclude us from really getting to that next level. And then on the other side, you're evaluating your underwriter relationships. We've got a lot of business to place. And, when we're talking to underwriters and they're adamant about trying to write more of our business, well, it's a two-way street. We're going to send it to you. We're going to tee it up for you. You got to be able to hit our numbers. And if you're not going to hit our numbers, we got to sit there and have an honest and frank conversation. Why are we not matching up? Why are we not writing more business? And if we can't get there, well, then maybe we got to kind of move them down the list and they become a market of last resort for us. So you're constantly evaluating. And then I think the bigger your book gets, the more you realize the importance of having good partners on both sides and having those retail clients who are upfront with me and make it, a little less painful to do my job, and same up with the underwriters. This job is very, very challenging. It's very, very, it requires a lot of patience. And we're all busy. So we all let's move things in the right direction. And if you've got people in this link who are not helping you get there, well, then we gotta reevaluate that relationship.
Yeah, no, I think overall you're talking about like the importance of kind of having like those hard conversations, both with the retailers and with the carriers, instead of just kind of putting it off. And just with the retailers in particular, like you see sometimes some retailers, like just knowing like their intention, like do they want to be like a partner with you, or are they just wanting you to like market their account for them, block the market, and really not intending to bind that account with you, or just kind of like making their own quote look better sometimes in a way? Like, can you kind of talk about like that process and just kind of, I don't know if it's like weeding out like who wants to be a partner and who doesn't, or?
Yeah. I mean, I think that, and it goes back to those A, B, and C relationships. For the A's, if they want us to validate their option, we're going to do that every single time because they're in that top tier category. They value us, we value them. But it's that C range that becomes kind of always questionable. What are their intentions? And I look at it like, if you come to me and tell me, hey, we just need you to block the market, hey, that's fine. We tell that to our underwriters. No one's wasting their time. We're always happy to do that. But if you come to me and say, hey, I need you at 40, and I come in at 40, and then you say, oh, actually, I need you at 25, it's like, where are the goalposts? And why do they keep shifting one way or the other? So that to me always comes back to this frank, honest, and open with your clients on all sides of it, because that's what our underwriters expect of us. If we tell our underwriters, hey, if you get to 40, we have a bind order for you, and they get there and we don't deliver, well, we got to turn around and explain that to them. So I think it goes both ways here. What our underwriters expect of us, we expect of our retail clients as well. And it's all part of the process. And it all comes down to the communication. You got to communicate. What is your intent? And if your intent is just to use us to block your markets, if you're going to send in, and this is part of book evaluation, we can look. If I've seen 25 submissions and one bind order, that's not great, especially if we're quoting. Our goal is to quote every single account. So if you're going to go 1 for 25, what's going on? Where are the other 24 accounts, and why are we not getting orders on that business?
Yeah, you're bringing up a really good point of just kind of that limited resource of time. You can only write so many emails in a day. You can only take so many phone calls. You can only quote so many accounts. At some point, like it's like if you're doing this account for this retailer that isn't going to bind with you, then you can't do another account that might have got you that bind order, might have had you success with your underwriting partners as well.
Yeah, I mean, I think like you're saying, there's a finite amount of time in the day, finite amount of time in the week. And as much as, for us on the broker side, like I can control it, we'll work 24/7 if we need to get submissions into the marketplace. But our underwriters are inundated. So if we are delivering them a submission and they're giving us a quote, there needs to be a reasonable expectation that this thing is going to bind. And that's part of, recognizing it's not so much we know, I think on the wholesale side that sometime our time is going to be wasted. We have kind of competing forces. You have direct markets who want to come in and take our business. You have other wholesale brokers who might have a relationship. You have insurers who might not want to buy the insurance coverage because of, a contract falls through. So we understand, I think, that time for us might get wasted. But what we can do is make sure that our underwriters' time is not getting wasted because their time is especially valuable. And for us, our time is really dependent on our retailers and the clients that we're working with and where do they fall within this A, B, and C category.
Yeah, no, that makes a lot of sense. And just kind of that's something I really learned is during that first experience with you is how like entrepreneurial like the role is, but then you're still very like within the company, you have a lot of that resources, you have a lot of that knowledge sharing around you. So it's like an entrepreneur like in the company. And then how like just speaking to like you can choose who you want to work with for the most part. Like sometimes you might have a specific underwriter like assigned to your office or assigned to your company. But then like the retailers, there might be some existing relationships you would have when you would roll off, but then just kind of doing that constant evaluating and then choosing who you want to use your travel entertainment budget with and who you want to travel with, and then who's like in your best interest to establish those relationships with and really take a step farther with them.
Yeah, I mean, I think, I had never heard the entrepreneurial. I didn't realize that was a word, but yeah, I mean, I look at it like we're all kind of running our own individual businesses within a larger business, so as you grow, you're hiring people. And the only way to motivate your staff is kind of me individually as the leader. I need to get better at my leadership abilities. The guy who runs our office, his goal is to drive the larger office revenue growth. And that's dependent on each of us as producers running our teams and running them smoothly and dealing with the HR stuff that comes along with having a group of people working for you. But at the end of the day, it's only me who can motivate them and me who can push them forward. And I think that's a big part of it. It's, we are fortunate to be able to go out and spend money and treat our clients well and treat our underwriters well, but we need to spend that money like it's our own. So imagine if you are running your own business, you're not going to go and frivolously spend a ton of money in different places. When we spend money, we're doing it for a very specific reason. It's to take care of the people who are taking care of us, and that's both internally and external.
Yeah, no, that's a really good way of putting it, because you're really investing in the people around you and the people that are helping you do your job, or at least making your job easier than some other people. So what would you kind of say of, you mentioned kind of growing your team and how your leadership might have to change. Now you might have to learn how to manage in a different way. And especially with like COVID now, like of kind of like the culture change and like work from home, and how hard has it been, or how can you speak to like how you've stayed connected internally with your team, but then also externally with your retailer and carrier partners?
Yeah. I mean, I think staying connected with the retailers has actually been kind of the easiest piece of it, because depending on where I travel in the country, certain restrictions were there or not there. And, we were not necessarily going into our retailers' offices like we may have in the past, but we were able to go out there and take them out for lunch and, and have drinks and do whatever the social aspect of our jobs. And, for the underwriters, that became a little bit more challenging just because there was kind of corporate mandates that they were not supposed to be out and about. And it seems like all of that has kind of, gone away to a certain extent at this point. So when I've been traveling this summer, we were in retail offices. We've seen underwriters out and about. I would say the hardest part is the internal, staying connected. I made a new hire in January, and training and development has definitely suffered as a result of COVID. It's just, we can all get on Microsoft Teams calls every 10 minutes and run through things, but the ability to walk into someone's office on a whim and just say, hey, what do you think about this? That's really what I think makes our industry unique. And being surrounded by people who want you to succeed is something you can't emulate when everyone's on their computers and away from each other. We're finally starting to get people back in the office here, and it's been great. My counterparts, after I have an accountant, hey, I've got these markets. You think I'm missing anyone? I have my team come into my office like, hey, we need to make sure we're on top of all of this. That's stuff that you just can't emulate as easily in a Teams and in a virtual environment. So I'm a firm advocate for getting people back in the office. I recognize that there is so much to be gained from a training, development, and communication standpoint when you're all in the same place.
Yeah, I can definitely speak to that. Even in the short time that I was in the office with you, just being able to see that style of when you are picking up the phone, when you're writing an email, when you're getting a call coming in and you have to go find that account in your email, and just kind of like how fast things move, and like how you need to be able to like help that retailer dive into that account, see what's going on, know your book, know the markets, know where everything is at. And I think that's something you won't really see unless you're in the office learning that way.
Yeah. I mean, this is a fast-paced industry. It's what makes it fun. But if you're not there and you're not hearing the phones going off every 5 seconds, you don't really get to pick up on that.
Yeah. So you mentioned kind of the use of technology, and just kind of like, do you think you'll be traveling a little less now with kind of like Teams calls, or obviously if you have to get in front of people and kind of like that's another step to building that relationship, kind of building that trust?
I don't, because that's the part of my job that I like is getting out in front of people, meeting new people, connecting with them on a personal level. I find that the problem with technology, I mean, you have, let's start, I guess, with the positives. I'm as much as it may appear, otherwise I'm a very positive person. But what I would tell you is that technology is great because it allows us to connect in an instant with anyone across the country and frankly across the world. And that's so unique. I'm able to talk to London at 6 a.m. and it's just something that was not available 10, 15 years ago. So I think that is certainly a positive. You can always be working regardless of where you are. The other side of that sword is you always, to a certain extent, are expected to be working because, so long as you've got your cell phone, I've got my email, I've got accounts, I've got everything I need on my miniature computer. So I think it's kind of, you can always work, but then you almost always have to be working on the production side. But I think that with the Teams calls and everything else, you start to see people lose focus, because are they fully invested? Or for me, I got 3 screens and I know what it's like. I'm on a Teams call here and I'm watching my emails on another screen. So you don't have anyone's undivided attention. And that's where I think being in person is really the most beneficial because you're there one-on-one, looking each other in the eyes and really giving each other your undivided attention and pushing things, in the right direction.
So how do you think that's going to kind of be hard for new people entering the insurance industry, either from college graduating or just kind of somebody coming over to the industry from another half of the workforce? And then what kind of advice do you have for kind of that new person entering the industry?
I mean, I think it's, the challenge. I don't know if it's, I would say the challenge in our industry, and this is speaking on the production side, is you have to want to grind it out. You have to really want to put in the work. And I think the other big piece and the advice that I give people is you have to look at this industry as a career. If you look at it as a job and all you're thinking about is a year from now or 2 years from now, you're just not going to have the satisfaction that comes with learning and development and growing as an individual in the excess and surplus lines industry. However, if you look out 7 years, you look out 15 years, and that's tough. Believe me, I get it. We all want that instant gratification. You go back to technology. Technology has afforded us instant gratification. It's like you post something on Instagram and you're getting a like right away, and there's your little endorphin kick, and that's all good and well. But you have to be able to look at things long term and recognize that when you enter the industry, you know what, you might not be compensated as much as your other friends. But if you sit here and you put in the work and you put in the time and you constantly learn, you're going to make up for that, 5 to 7 years down the line. And then you start hiring people, and then you start running a team. And then, before you know it, you're managing your own micro business within a larger structure. And it's the same thing on the underwriting side. At some point, you're the junior underwriter, and you're doing all policies and endorsements and kind of busy work. And eventually you get some authority and some more authority and authority. And then you're the underwriting manager. So you just have to have the long-term outlook and recognize that if this is your career, you can be successful in, as time goes along. And I think the difficulties are just going to come in. Really, I think the talent gap is a big problem for us right now. I think we see everyone from the broker side to the underwriting side being understaffed. And so the difficulty as a young broker is coming in and developing your relationships and recognizing that the person you're working with today might not have all the authority in the world. But if you latch on to them, and I have other young underwriters that I like to work with, and I've been working with them going back 7 years now. And early on, we couldn't really get anything done together. And it was super frustrating. But now they've got massive amounts of authority, and we're able to get deals done together because they sat down and they've moved place to place. But I think you just have to sit here, have the long-term outlook, and recognize that as a career, this is a really good one.
Yeah, no, I couldn't agree more. And I think just kind of like getting in, putting your head down, doing really valuing the process of starting with the smaller accounts, practicing, gaining confidence, just building your skills, and then moving to larger accounts. And I think it's so important to really celebrate the wins. When you get that bind order, enjoy it, and then thank the retailer, thank the underwriter, and just really celebrate the small wins and just see it that hard work build up.
Yeah. I mean, I think you have to, I spend every day cursing, screaming, getting pissed off. And, you have to celebrate. You have to celebrate the wins. You have to get excited about it, because if not, the industry can beat you down, because you think you're going to get a deal, and all of a sudden a standard carrier comes in last minute and takes it from you. It's going to beat you down. It can wear you down. Burnout is very, very real, certainly on the wholesale side. So you have to bask in your success. And if you're up 20%, if you're up 10%, hey, that's great. You're working hard. You're moving the ball forward. And then when the big ones come in, I always look at it. I give myself 24 hours to celebrate, 24 hours to commiserate, and then we're moving on. But enjoy those 24 hours. Take it in, value what you've done, the hard work you've put into getting something done. And then tomorrow's a new day.
Yeah, no, it's definitely a great outlook and some great advice. Is there anything else you'd like to share?
No, I mean, all I would tell you, Darren, thanks for having me on. I would just tell you, your peers who are going to watch this video, we need people to enter this industry. It's a great opportunity, and it's a great career path. And, I hope that hopefully this gives you a little bit of insight. Please reach out to me, find me on LinkedIn, and I'd love to provide any other insight I can give for you.
Awesome. Thanks so much, Brett, for coming on. Appreciate it.
Yeah. Thank you, Darren.